I'm good. So it is July 1st, and first half of the year is over.
Officially, I've seen more. I've seen about the same volume of like, let's recap the first half as you usually do at the end of the year.
Yeah, right. I mean, let's face it. Anybody had a plan this year, it kind of got blown out of the water. So hopefully everybody by now has kind of updated their annual operating plans or getting close to getting them completed, because you got 6 more months to kind of fill in the gaps.
6 more months of filling gaps, 6 more months of opportunity, risks and opportunities, right?
Right.
And, but now more than ever, I think people are focused on the countermeasures, which is probably one of the biggest pieces of planning, is identifying possible risks, identifying possible opportunities, and what are you going to do if you see one of those coming down the pipe.
Right. And it is July 1st, so many of us are like planning not PPPs, but planning vacations, which is nice. I'm looking forward to you being away for a week.
I might have a fill in here, so I'm having too much fun next week.
But yeah, today we're bringing back our Growth Lab 4, and we're going to be focusing on number 2. But before that,
yeah, we had a lot of conversations this week, Dan, whether it's with banks, Growth Lab Jump, about the PPP forgiveness, right? And that, somewhat ironically, last night, Senate passed a bill.
The Senate passed a bill. Supposedly the House will too, but it's essentially extending the PPP loan application from June 30th to, I guess, maybe the end of August.
August 8th right now is what they extended it to. But while we're all kind of moving on to the forgiveness side of things, and we've had a lot of volume this week of questions about forgiveness, but at the same time, there is still about $130 billion left in the PPP, I'll call it fund, and the Senate at least is looking to extend the application due date, which had been yesterday, July 30th, and they're extending that to August 8th, hopefully, for other businesses that have either dragged their feet or wanted to wait till the rules were clearer to apply.
And many financial institutions have actually stopped accepting applications like last Friday. And so I wonder if, and many small banks actually stopped accepting applications weeks ago, if not over a month ago. So I don't know. Let's see what happens. And, to the best of my knowledge, none of our banking relationships are accepting applications since Monday. So we'll see what happens.
I expect that whether it's Lendio, PayPal, Fundbox, I expect those ones will open back up if things do pass the House and get signed into law. But we'll see.
Yeah, we'll see. And this week we actually had this week and last week, we had a lot of great webinars and seminars. Well, I guess they were all webinars around the PPP loan forgiveness application and process. I think even we've had some that we've co-branded with other partners, including bankers. But you actually had your
the Growth Lab Jump.
Jump. You had almost 100 attendees on that one, which was pretty neat.
Yeah, on Monday it was our attendance is usually a little lower than that, and we had a lot of interest for obvious reasons. I think that a lot of people are trying to figure out now that the rules are clear, how to actually read these rules.
Yeah, and then obviously the easy application versus a longer form. I mean, that thing is a friggin' grind. It's like 10 pages or something. So there's a lot of what goes in, because it's not just a confusion. There's actually some legwork that needs to get done to complete those tables and those worksheets, and kind of understanding what are the real drivers of the forgiveness. And we identified that there are 2 major drivers that we're trying to get managers to embrace and truly understand, because there is still some time for planning, although many are sort of in the 8th inning, and the game's kind of
there's still a few kind of key decisions that business owners, or I should say PPP loan recipients can make about their forgiveness. And the PPP Flex Act brought some of those about. But right now, some of the key decisions you have is whether you use an 8-week or 24-week forgiveness covered period, as well as which application can you actually utilize.
Right. So the key drivers that we kind of pinpoint and where people probably have to spend most of their time, it's not on the monthly rent or the utilities, right? Where everybody was sort of, thinking about back 3 months ago. I would say, the two that we pointed out was the employee coefficient, I call it coefficient, but quotient.
It's the FTE reduction quotient on the application, the official name. And the other one is obviously your payroll costs. But the reason we dove into that one on Monday was, these forms, they look pretty simple, but line 1 is your payroll costs.
Yeah.
That is made up of, the Schedule A worksheet or Schedule A. Line 10, I believe it is, but line 10 itself comes from 4 different lines on that one. Those 4 lines come from another worksheet. So you go to the second, third derivative of this. You have, like you were saying, Dan, there's a lot of data that you have to gather on the payroll side, by employee, by week. How much have their individual compensation been reduced? Has their time been reduced? All that has to roll up into this one pager. And that's why we took those 2 kind of key drivers, the payroll costs, and dove into that, what they are, and then in particular your FTE reduction quotient, which is in and of itself one of the drivers and one of the things that we got the most questions about, whether that's the quotient itself or whether that is how our FTEs calculated.
So coming out of that, I mean, there were so many people on that webinar. Everybody had a lot of questions. So our marketing team actually went ahead and created a 20 questions.
It kind of took a lot of
questions for the PPP loan forgiveness application.
Yeah.
What's 1 or 2 that you kind of geeked out to a little bit?
Yeah, I think the one was, which application can I use? And, it's clear to understand which one you can use if you understand all the language. But it's like reading taxes, right? Who wants to put together their own taxes?
Right, and we have a website up on mygrowthlab.com /
It's mygrowthlab.com /EZ-forgiveness-form. And the key thing there that I'd point you towards is a decision tree about which application you can use. It's kind of a few yes/no questions that get you to an understanding of, call it the 80-20 rule, because there's more language in the actual application, but the 80-20 rule of which, can I use the easy application or do I really need to go to the long form?
Right.
And then if you have to go to the long form, there's a link on that page to mygrowthlab.com /loan-forgiveness. And there we actually have the Excel spreadsheet, which is a toolkit for a calculator for you to use to put in employee by employee data, understand what their, if you need to go into safe harbor, what your FTE reduction is, all that jazz.
And in full disclosure, you should reach out to your CPA, you should be reaching out to your tax preparer, you should be reaching out to your closest business advisor. Use this tool as a guideline. So that's one for the lawyers.
So that was one question. The other question was in the FTE calculation. How do I actually calculate FTEs for the forgiveness application?
Right, because there's like 2 ways, right?
There's 2 ways that you're allowed to calculate that. One is your actual FTEs using 40 hours on a per employee basis, using 40 hours as the the baseline. And so if you had somebody that worked 30 hours, that's a 0.75 person, right? Or you can use a binary, either 1 for full-time people or 0.5 for anybody that works less than 40 hours a week. And the only caveat is that you have to use the same calculation for the covered period as well as the reference period.
And in terms of strategy, one versus the other, that's really going to come down to a function of the majority of your part-timers, are they between that 15 to 20 hours? Otherwise, you're probably using the 40 hours as the denominator.
Right. Depends a little bit on your total headcount as well, right? Like, did you have more people before, less after? So use the tool at mygrowthlab.com /loan-forgiveness to help you do some of those scenario planning and decision making around which is 8 versus 24 weeks. Is it actual FTE count, or do I use the 0.5 0.5 number? So,
and the 20 questions on the PPP loan forgiveness application process is probably going to be posted on our website sometime today at growthlabfinancial.com /blog. And these are live questions that we've taken over the last, probably since last Thursday. And like I said, today is July 1st. We are excited. Looking forward to the summer. So let's kind of jump into number 2 of our Growth Lab 4,
So
knowing where you're making and losing money.
Yeah, let's so getting back to growth, off the PPP,
Back
to the Growth Lab 4. We did cover so the Growth Lab 4. Let's just review them for all of our listeners. The Growth Lab 4 are 4 areas where we find that the businesses of all sizes are often challenged with. Number 1 is cash, understanding your cash and cash flow.
And then understanding your cash flow, we had a great guest last week, Brian from Tally Street. So we did that virtually last week, which is pretty cool and first time. So he's got a company, he's got a tool that really does help management teams understand their cash flow. So number 2,
which the focus of this week is knowing where you're making and losing money.
Yep.
We'll get into that in more detail. Number 3, we covered 2 weeks ago. We kind of jumped a little bit, but that one is about understanding marketing for profit.
Right, and we did that because we had Brent from Winalytics, another good guest, and of course a customer of ours.
And then lastly, the 4th one is understanding how to incentivize employees for performance, to hit company goals.
Yep, and of course, coming out of today, today really sets us up for helping companies create pay-for-performance systems, right? Because you need to be able to measure, right? You need to be able to measure and look back and test against some benchmarks or some goals so that you have for your employees. So
Dan, like kind of going to those are the Growth Lab 4, and we like to look at these in kind of 4 things underneath each one: understand, design, implement, and measure.
Right.
It's a good kind of framework that you can look at each of these pieces with.
Right. So let's start with number 1, which is sort of the basic understanding. Like, how do you understand where you're making and losing money? Well, most companies, for better or for worse, right, in the past, they've essentially, and by the way, there's 2 ways to this, right? There's the extreme, which is I don't have any systems. I just dump everything into sales. I dump all of my costs of labor under my wages and payroll, maybe even worst case in my operating expenses. Maybe I don't even have much cost of goods sold. So you don't really have a good perspective on your gross. And on the flip side are those companies that are trying to get to the nth degree and add way too much detail to their chart accounts and therefore their financial statements. And they ultimately end up spending too much money and the cost benefit analysis just isn't there. Right. So understanding is like, okay, it could start with, hey, where's my revenue being generated? So it could be a geographic distribution, but it also, and where most things will do is like what types of service or the product line breakouts. And today, the beauty of today, and I'm going to jump the gun to sort of the implementation, the beauty of today is you do have a lot of disparate systems that they finally do talk to each other. So you're not having to pay somebody $15, $20, $25 an hour to enter all that data invoice by invoice. And we've seen customers do that where they're generating 100 invoices or 200 invoices a month. And those invoices are literally being rekeyed in from, say, an invoicing system or an enterprise system into your general ledger. So
it does all start with understanding not just where you're making and losing money, but kind of blending into design is understanding what systems am I using today, what systems are out there, because it's not just about keying things in, it's about system integration and knowing how your data, what data you're generating, and how you can get that to flow to the appropriate places, right? Because you don't need all of your detail in the general ledger. Maybe you have a POS system that has all the detail, or maybe you're going to roll it up after the fact from the POS system and from your general ledger into another reporting platform, depending on what your goals are, what your needs are.
So we'll go back to the implementation, but again, understanding is like at the end of the day, I produce X amount of revenue across 3 or 4 different service product lines. And I want to better understand either what's my cost of sales, what does it actually cost to acquire customers for these services or these products or these geographic regions, or what does it take to actually produce, pay for people to actually produce this revenue. And then being able to step back, not just at a global level and say, hey, what's my company-wide gross margin, but what's my gross margin? What's that contribution by product, by service to the bottom line? Mm-hmm. And that is so critical because it really begins to position you to better understand and make decisions that you can essentially point or tailor resources, deploy resources to certain parts of the business that are maybe a little more profitable, right?
More profitable, put more resources together. I'm working with a customer right now that is kind of going through this shift, right? All the revenues in one bucket in their P&L,
Yep.
and their cost of goods are actually segmented, but the revenue is not segmented. And it seems like an easy thing to do.
And it's a box subscription
right?
business, I believe, right?
Yeah, it seems like an easy thing to do, right? But now you have to make decisions as a management team. How, call it 12 months forward. How do I want to see what are my products? What different ways that I'm selling, right? And I'm selling the same product through a few different channels. How do I want to slice and dice the data in my general ledger?
Right. So let's go to design, because I think where you're headed now is underlying customer profitability. So in the subscription business, RMR business, you hear a lot about customer acquisition costs versus your lifetime value. Well, guess what? You really can't get to that level of analysis without having designed systems and processes that bring all of that data together and then be able to step back and break out the components of that data. So whether you're a monthly box subscription business and you have your box builds costs, let's call it, your cost of labor, but you also have a critical component, which is your customer acquisition costs. So bringing all those things together, bringing all those things together, I always say bookkeeping today is a whole lot less about debits and credits and a whole lot more about systems integration. Because if you want to get to that nth degree of knowing where you're making and losing money, you really have to understand the disparate systems that grab the data, whether it's customer data, inventory management data, et cetera. So,
and can I get on a soapbox for like 2 seconds?
Sure.
Is like, this is kind of key. I mean, last week Scale Factor went under, right? Or decided to shut down shop.
That's right. That's a big one.
And there's a lot of data. I mean, your point is the bookkeeping of today is not like yesteryear. It's all about systems integration, all about data, right? Automation. But at the same time, you really need somebody, I'm going to say body, like you need a body to help you take that data and interpret it, and going into designing, implementation, and measuring. Yes, the computers can do like push data in different directions. They can crunch numbers, but they can't interpret that for business owners. And so when you're making and losing money, like, yes, you can push the right stuff into the right categories, but then you have to make decisions. Where am I going to hire a new person? Like, and that's where I feel. We'll feel a little strongly about this, but I feel that companies like Scale Factor that tried to build a technology platform, and they did a great job, but they forgot about and ignored the people side of it. I've got to help the especially the small business owners, take this data, interpret it, and implement it.
Yeah. And we've and
get off my soapbox.
No, I'm going to spend 30 more seconds on this. I mean, I have spoken to at least a dozen former customers or current customers in transition. And this is like in the last week, so this is in real time. And they were great people, great product, but one customer said, I didn't know what I was buying, right? Because at the end of the day, I wanted CFO services, I wanted some financial plan analysis, but somehow it was always about the bookkeeping and the accounting. And so, yeah, you're right. You push the low value. We do this all the time here in our business, right? You push low value work, you try to automate it. You try to create systems and processes that eliminate rework and improve quality. But at the end of the day, it's about that advisory, right? So, back
to this. So that we got off on that when we were talking about the designing of this, right? Because you can design your chart of accounts to have product line revenue, product line cost of goods, give you a product line gross margin.
And then one of the other things we talk to customers about, because you do have the two extremes, the customer that doesn't have visibility and the customer that goes to the nth degree to get visibility. One of the things we always talk about is try not to over future-proof your chart of accounts, over future-proof your processes, because this is going to be dynamic, right?
And you can as a small business, you can spend too much time and too much money on your accounting and bookkeeping. And even that's one of our businesses, we try to push people away from that, right? Because if we're going to be spending too much time because the systems are too complicated, you're not going to be happy as a customer, right? Because you're getting too much.
So on the design level, it's asking yourself, what data do I want from from my systems, right? What type of decisions do I want to make, right? Sort of, you've got your current state, I ain't doing anything right now, everything's just kind of going into one bucket, to, hey, here's the type of insight I would love to derive from my financial reporting. Great. So now you have a sense of the design, and it could be anything like customer acquisition costs, lifetime value, underlying customer profitability, which I'm a huge fan of, or product line gross margins. Now it's a question of, how do I go from sort of current state, future state, how do I implement a journey that's going to get me at least 80-20 there, right?
And you got to think of things beyond your chart of accounts as well, right? Like you got to think of you know, some of the metadata within customers, right? Make sure that when I'm onboarding a new customer, make sure that their address is correct, right? If I want to do revenue by geography, I got to make sure that my team on the onboarding side is making sure that that state field or that town or whatever your geography might be is actually in there and correct. Because not everything is always going to be populated. You know, you're going to miss maybe it's an EIN number, maybe it's the address, or maybe it's a different, like maybe there's a billing address and a shipping address, right? Make like that level of detail. If you're going to be using that data, make sure the data is clean and good.
So on the implementation side, now that you have a sense of like my current state, my future state, and what that journey looks like, the implementation is all about, we're living in a time where there are these systems that already capture a lot of this native data that you need. And it's a question of bringing data. So I just got off the phone today with a company out in Austin. They're a brewery, and he uses, you know, he's a brewery, so he's got inventory, he's got a general ledger, he uses QuickBooks, he uses Ecos, and he actually uses a company for the POS system right up the street here, Upserve.
Yep.
You know, they don't, some of these systems, you know, they have native APIs that sync nicely with your general ledger. Others, you know, you may not be able to sync, and you don't really sometimes need that data in real time, but there's nice reports you can extract from sort of, let's talk about Upserve, right? You can extract that from Upserve, and then you can upload it into QuickBooks as a file, and then it kind of populates into journal entries and chart of accounts. So there are ways. You don't need to be paying somebody, an intern or somebody 15, 20 bucks an hour to be entering data, or worse yet, paying for a fractional CFO $1,000, $1,500 a day, in some cases, especially in New York and Boston, doing overpriced journal entries. You've heard me say that many times.
And Dan, on the flip side of that, I mean, you do have the young hip companies, I'll call them. They could be old hip companies. But you got the hip companies that are using the latest and greatest systems with APIs, et cetera, et cetera. But we also have customers that are like, they're like, yeah, I would love to be there, but I've got an ERP system from like 1980, and I'm still using it. It serves my needs, but I can't do any of that fun stuff that you're doing because the reports that I'm generating out are, and we've got customers like that. And on the flip side, you're not pulling all this stuff into your general ledger. You know, for them, we've often put together a dashboard on top of everything else, and therefore that in some cases we are like keying in from their financials into this, but it gives them some of that same insight and some of that cool same hip like graphs, et cetera, to help them make better decisions.
The last thing about the implementation piece is, if you do this right, because you brought like cool hip dashboards, if you do this right, that's where companies like Fathom or Giraffe, right? That's where they're able to work their magic, because at the end of the day, dashboard is garbage in, garbage out, right? If the data isn't being collected accordingly, you're right, in good time, cadence and rigor, right? You're not going to, those dashboards are useless. You can't really count on the data. So
we were just talking about one earlier, right? The invoices, they don't have terms on any of their invoices that out of this old ERP system, right? And that causes us to not be able to look at days outstanding and have confidence in that.
Right.
It's just simple things like that.
So then the last piece is the measure, and this is this is all about identifying the important ratios that you're trying to derive from that. That kind of came out of the design. This, at the end of the day, really sets you up for Growth Lab number 4, which is pay for performance. Because once you've got the collections, the design of the system, you're able to collect, compile, report out, and then interpret those into ratios, or being able to extrapolate into future plans, et cetera.
Right.
Now you can begin to implement and design systems to pay employees for performance, because you've got something that you can measure. some financial performance that you can measure. So ways to think about financial measurements is, something simple as like pure play, right? You were able to benchmark your financial ratios, your reporting
against other companies out there.
Yeah, right, against other companies that are out there. And then, of course, the other way to look at your how to measure is time series. How did I do? How does today compare to 12 months ago? How does today compare to where I see the company going in 3-5 years out? So,
right,
the measurement, in my point, we always say, like, if you can't measure it, don't do it, right? So,
and the other thing there throughout this whole thing is making sure that you're doing this so that when you're measuring, it's clear. You can communicate that. When you communicate that, people understand what it is. So you don't want to get too complicated in your measurements, in particular when you're paying for performance, because then you're going to spend too much time on a monthly, quarterly, annual basis trying to dig down into all these formulas, all these ways of calculating the metrics. And in a bad case scenario, maybe your employee argues with your metrics, right? You want to keep them clear, simple, and concise.
Yeah. So the last thing here, of course, when we engage with customers, like, oh, we really need financial plan analysis, or we could use more higher level financial interpretation, management, CFO services. We ironically find ourselves kind of taking 3 steps back, looking back at the accounting, looking back at the chart of accounts, because you are a little bit of a sitting duck if you haven't designed systems that help you understand where you're making and losing money. So today is July 1st. And
it's been an interesting first half of the year.
Yeah, I mean, just reflecting on the last 6 months of where our journey has taken us is a little bit of, like, I don't know, a little nostalgic, right? Kind of, starting to see the economy opening up. It feels good. So, we hope, we hope the next 6 months don't bring what we've seen, although we're seeing spikes in COVID in certain parts of the country. I've had conversations with companies in Florida and Texas and in the restaurant hospitality business. So hopefully, we get through this and
stay safe.
Plan.
And
And that's a wrap, guys. Thanks.